Hello and welcome to the analysis of the Hindu newspaper dated February 9th, 2023. In this video, we are going to talk about two important newspaper articles which are going to be very important, very significant for the civil services examination. So let's start with this video with the first important newspaper article. Now, this particular newspaper article is going to be important for the Indian economy because it talks about a move by the Reserve Bank of India where it has increased the repo rate by 25 basis point. Now this particular move is going to do what? It is going to tame the inflation. It is going to reduce the inflation. Now how this is going to happen, we are going to talk about in this particular newspaper analysis, right? So the Monetary Policy Committee, which is the central committee which decides all of the decisions made by the Reserve Bank of India, it has basically raised the benchmark lending rate, which is basically repo rate, by 25 basis points to 6.5%. Now this is going to do three things. It is going to keep the inflation expectations anchored, that is, it is going to reduce the inflation. Second thing, it is going to break the persistence of core inflation. Core inflation means the inflation which is happening in the core sectors, which are the important sectors in the economy. And the third one, it is going to strengthen the medium term growth prospects. It is going to increase the growth rate in the economy. So these are the three things going to happen with this increase in the repo rate. How it is going to happen, or how it is happening? So basically the repo rate, which is the rate at which the Reserve Bank of India lends the money to the commercial banks. Now this has increased from 6.25% to 6.5%. Now this basically means that if you increase the repo rate from 6.25% to 6.5%, loans to the commercial banks are going to get more costlier. They are going to increase the rate. Now the Reserve Bank of India is going to provide loans to the commercial banks at the rate of 6.5% instead of 6.25%. Now if the commercial banks are going to bear the cost of it, they are going to transfer that cost to the general public. So the loan interest rate to the general public is also going to increase. Now this particular move will leave the economy with less money. Now people will have less money because they cannot basically take the loans. So this is going to decrease the money supply in the economy. The decrease in the money supply is going to decrease the consumption among the people, because if you don't have the money, then how will you consume? Now this decrease in the consumption, which will lead to decrease in the demand from the public, and the decrease in the demand from the public will ultimately reduce the inflation in the economy. And this is how the Reserve Bank of India seeks to reduce the inflation by increasing the repo rate. Now this basically is done by the Monetary Policy Committee. It is the central committee. We have talked about it. So this is what this particular essence of this particular newspaper article is. Apart from it, we have also seen that it has also increased the growth rate in the economy, and it has also increased it is lowered the CPI inflation in the economy, right? So these are not very important, but what's more important is to understand the technical term, that is repo rate, which is basically going to decrease the inflation. We have talked about how it is going to decrease the inflation. So this is it regarding this particular newspaper article. Let's now head to the next important newspaper article. Now this particular newspaper article, its figures are not important. It talks about some of the figures regarding the disinvestment. You can go through the economic survey or the budget to understand more of those figures if you want to, but these are not important. What's important is to understand the disinvestment, which is being talked about in this particular newspaper article. Now these kind of newspaper article are important for the GS paper 3, obviously, that is Indian economy and issues relating to planning, mobilization of resources, growth, development and employment, right? So this newspaper article says that in the union budget for 2023 to 2024, the government has set an disinvestment target of 51,000 crore. Now this particular disinvestment target, may seem very huge, but this is a decrement. This is a down nearly of 21% from the budget estimate for the current year, and this is also just 1,000 crore more than the revised estimate, right? So what basically we need to understand is, what is disinvestment? So the disinvestment is basically the selling of government assets or subsidiary, such as the central or state public sector enterprises. Whenever the government feels that any particular industry, for example, it sold the Air India to the Tatas, it happened through what? It happened through the bidding process, and this led to the sell of assets in the Air India to the Tatas, right? So this is basically disinvestment. Now disinvestment can happen via three means, or there are three types of disinvestment. First one is the minority disinvestment, where basically the government retains the control of majority in the company, which is 51%. That is, the government will have a management control over that company. That company is basically the government company at all, in all its totality, in all its functioning. Now these kinds of investments, this investment is done when the government wants to ensure that it retains the management control, and at the same time it gets some kind of money in this regard. Now the second kind of disinvestment is the majority disinvestment. The government hands over control to the acquiring entity but retains some of the stake. For example, 75% of the stake is sold and only 25% is retained by the government, right? So this is called majority disinvestment, in which the government does not have any kind of management control, right? And the third kind of disinvestment is complete privatization. Now, complete privatization happens when 100% control of the company is passed on to the buyer. Now, these are the three kind of disinvestments, and they are basically done by a separate department in the union government, which is known as Department of Investment and Public Asset Management. Now, you would ask a question: how or why the government does it? Through it's a finance ministry, basically the Department of Investment and Public Asset Management. Why does it do it? Basically has three reasons. First one is to reduce the fiscal burden. Whenever the government, any kind of company is not performing, it is turning out to be a pain for the government to increase the revenue from that particular company, that particular enterprise. Then they are going to disinvest in that particular enterprise. And the second thing is to bridge the revenue shortfall for that year. If the government needs more kind of revenue, then it is the safest and the simplest and the fastest means to get more money, right? If you are in the shortfall of the revenue for that particular year, you disinvest, or basically you sell off your assets. Now the third reason why the government disinvestment is, it also uses disinvestment proceeds to finance the fiscal deficit. Whenever the fiscal target is basically, you are missing out on the target, then you are basically disinvest, right? So disinvestment basically means selling of the assets to the private sector or any of the other sector, right? So this is it regarding this particular newspaper article. This was basically that to understand the disinvestment. All the figures that are mentioned, they may or may not be important, but what's important is to understand what is disinvestment, types of disinvestments, which department of the government does the disinvestment, and why do the government does the disinvestment. So this is it regarding this particular newspaper as well. And this is it regarding this particular newspaper analysis. Thank you from my side. Do like and share the video and subscribe to this channel. Have a good day. Bye.